Hello, Finimizers, and welcome to another Finimize Live. So, my name's Reda, head of content here at Finimize, and I am absolutely delighted to host today's event on how to be a tax-free mini angel investor. So, today's session is brought to you in partnership with Crowd2Fund. Crowd2Fund is a London-based FCA-regulated investment platform that enables private UK businesses to raise finance directly from retail investors. It was founded in 2014 as a platform built for entrepreneurs by entrepreneurs. Crowd2Fund provides an alternative source of funding for UK small businesses who otherwise remain underserved by traditional banks. The platform gives investors control to choose which businesses they wish to back and includes the ability to place their portfolio in an innovative finance ISA wrapper, basically enabling tax efficient investing. You can find out more about them in the link in the chat right now. And of course, this is a finance event, and no finance event is complete, without a quick disclaimer. It's a very quick disclaimer. Your capital is at risk, and anything we discuss here is not financial advice. And your tax treatment depends on your own individual circumstances, and of course, may be subject to change. Now, with all of that out of the way, I'm really pleased to introduce today's guest. We are joined by Toby Wootton. Toby started out at the dawn of the internet trading in domain names and founded a successful London-based e-commerce startup, LondonRestaurants.com. He then traveled and worked across the world, leading digital transformation projects for large corporates and governments. For the last 10 years, Toby has brought his breadth of experience to focus on scaling fast-growing businesses in the fintech and payment space. Now, CEO of Crowd2Fund, Toby is shaping the business for growth while ensuring strong regulatory adherence and investor relations. Toby, what a background. It's an absolute pleasure to have you here with us. How are you doing today?
Thanks so much for having me. Like, really great to be here and great to be part of the Finimize community. I watch you guys closely, and it's a pleasure to be here. Thank you.
Thank you. Thank you once again. So without further ado, I have some questions to ask you, and then we'll switch over to audience Q&A. So
Sure.
my first question, Toby, is for those people newer to the space, what exactly is an innovative finance ISA, and why is it gaining more traction these days?
Yeah, innovative finance. So I guess most people on the call will be familiar with ISAs, right? So I think it was back in the 90s they created the ISA, and it was all about tax efficient saving. And then there was a few iterations of that. So we've got the cash ISA, we've got stocks and shares ISA that people will be familiar with, and then if you got kids, the junior ISA is always a winner. But yeah, not many people know about innovative finance ISA. So they were launched in 2016. There was actually only 11 providers in that original launch, and Crowd2Fund was one of them. And what it allows you to do is to invest in peer-to-peer loans or debt-based securities. So, property bonds, loans, that kind of thing. And so why is that gaining traction? I guess, people are looking for breadth to their portfolios. I think people want, diversity in what they're investing in. And obviously there's a lot of volatility, stocks and shares. We all know about that. And the cash ISA is going to be capped at 12K. So, there's a few things that are making it attractive. And I think one thing I suppose that we're passionate about at Crowd2Fund is that it makes a real difference. And I think it's more fun. So, an IFISA allows you to invest in, there's IFISA portfolios that invest in green businesses or property, or, we invest in SME, small businesses across the UK. So, yeah, it's just a little bit more meaningful and you can make a difference. So I think that's why people are getting into them.
Really fascinating. And I guess one of the appeals, as we all know, with ISAs is, the tax efficiency. And just kind of focusing on that bit a little bit, in practical terms, so for a portfolio, how much of a, let's say, performance boost or how much tax savings can people or investors realistically expect by shielding these specific kind of investments from the taxman?
Yeah, sure. It's yeah, and look, I'll reiterate the caveat that I'm not I'm not an advisor by any means. But I think the limit is 20K, so you've got an annual limit of putting your 20K into ISAs across the board. Um, and I think there's no tax, so there's no capital gains tax, there's no income tax, there's no dividends tax on the returns for any ISA. But I think what people sort of lose sight of or forget is that there's cumulative growth. So, if you're getting interest from an ISA, that can feed back in. So you've got compound growth, and that's really attractive, right? So if you've got, let's say, an IFISA that's earning 8% and you've maxed it out with your 20K, keep it there for 5 years and it'll be 30K, So yeah, the tax efficiency is great if you're looking at it as a longer term investment. And so yeah, I think that's why people like them.
Yeah, makes perfect sense. And if I think historically, because you mentioned earlier in the start, you're investing in kind of private businesses, and historically, private market opportunities were reserved for either institutions or ultra high net worth individuals. What has fundamentally changed, in your opinion, to open up this particular kind of asset class to individuals and retail investors?
Hmm. That's a good one, I guess. I mean, it's relatively young still, I suppose. So, the IFISA only came about in 2016, so that's 10 years young. So I think regulation is a key thing that enables people in your Finimize community, for example, to invest. I think that's the first thing. I guess the second thing is tech is a big enabler, really. So, platforms like ours make it really easy for people to be able to invest in yeah in private businesses and so on. And I suppose the third thing is mindsets, like you say, people have changed. You don't need to be a high net worth individual anymore to invest. And I mean, our platform is really accessible. The minimum investment is just £100. So I suppose, yeah, it's just it's easier, and people are talking about investing more. I mean, I know your community is growing, and I think Finimize is a great example of where people are looking, and yeah, they just weren't in the bad old days, were they? So it's good.
No, absolutely. And maybe just for the sake of making this clear for everyone, when you're talking about, investments in these wrappers or these investments in private businesses, are these equity investments? Are they loans, like peer-to-peer loans in a way, or loans, or some kind of mix of both are allowed in these wrappers?
Yeah, I mean, so look, for IFISAs across other businesses, there's different ones. I mean, the loan pad, prop lend, there are a lot of property related ones. What we do is specifically debt, not equity, and so that's great as far as the the business owners are concerned because they're not giving away a big chunk of their business. Yeah, yeah. So I mean, it's for us, it's all about debt, loans.
And you mentioned earlier that, you take pride that it's doing good. So can you give some tangible examples of how, if ISA-backed investments are making a real world impact?
Yeah, absolutely. I mean, look, I'm here to speak to your community, and I don't want to bang on too much about Crowd2Fund, but we're really passionate about supporting UK limited businesses. So, I mean, people often don't realize that it's like 99% of the UK economy are small businesses. And within that, you've got the micro SMEs that's less than 5 people make up a huge chunk of that. And I'll give you an example. Like we listed a loan this morning. There's a couple of brothers that were passionate about the Titanic and about Jack the Ripper. So they started a tour company, and they're profitable. They want to expand. They're looking for 35K to build out their business, and they're great guys. They're great guys with a vision, a dream, and we're supporting that dream to come true. So I think that's the sort of thing where and the way it works is we list the business, we do our due diligence and give a credit commentary and give our thoughts on that business. But it's down to the individuals as to which businesses they want to back. So they can pick, this whichever ones take their fancy, which is great. So they can do their own due diligence, they can look through the accounts and they can decide which businesses they think are worth backing. And I mean that one listed today as an example has an APR of 15.5%. So, the returns can be pretty good.
And in that particular case, so if I think about that business, why are they being underserved by traditional banks? So why wouldn't a traditional bank lend them? And why? And of course, you guys are coming in and filling in the gap. But just out of curiosity, how come they're not able to raise the debt from a traditional bank?
they're massively underserved SMEs. So I think 2008 crisis, the banks just got risk averse and then they started pulling away. So it used to be that the banks lent about 80% to SMEs. Now that's dropped significantly. Really, it's only challenger banks and specialist lenders like us well, we do 60% total now. But there was a great report out by British Business Bank recently. I mean, the market is still 65 billion underserved. So, and these are the two biggest challenges for small businesses. Working capital and finding and retaining good staff. And these are the bread and butter of our community. This is the businesses you walk past every day on the way to work. So, yeah, the banks are just not interested. And so, we're really pleased to be able to support these guys.
Nice. And you mentioned earlier that you put out a credit report. So are the investors on your platform kind of going over these reports, the businesses, and they select which ones they would like to back and ultimately lend to?
Absolutely. So we're a platform. We connect the borrowers with the investors. We've got around 12,000 retail investors on our platform, either sophisticated high net worth individuals or not, And I think it's key to stress that, there's a risk there. And we do due diligence on every business that comes to us, and we provide a credit commentary, and we provide access to their finances, their statements, and so on. And one thing we also provide is a Q&A facility with the directors of the business, which is used really intently by a lot of our investors. So they ask questions, what are you going to use the money for? What about this? What about that? So it's really easy for investors to decide who they want to go with. And I think from a diversity or spread portfolio perspective, most of our investors, the average pledge is £600 per business. So, that's what I would say is that the successful investors are the ones that spread across numerous different borrowers across the platform. So yeah, I mean it's exciting. Some people only back green businesses. Some people only back the ones they like the look of. But yeah, there's the opportunity to do your own due diligence and decide who you want to pick.
Very exciting. Big believer in, spreading the investments out. As I always like to say, diversification is the only free lunch in investing, so you might as well eat it.
Absolutely, I like that one. Yeah.
But speaking about, diversifications and the context of a portfolio, so where do IFISAs realistically sit within a well-balanced portfolio? If I think about a traditional portfolio invested in stocks, bonds, maybe some gold, perhaps a little bit of crypto,
Yeah.
where do IFISAs fit into that allocation? Are they kind of their own sort of separate thing? Are they part of the fixed income allocation, or am I thinking of this completely differently?
Mm, I mean, they're a diversification allocation, I guess. I mean, they're on the edge with alternative investments, and I mean, we're badged as high risk for sure. So, and I guess you've only got your 20K to play with from if you're keeping it within the IFISA wrapper. So, um, yeah, I mean, speaking with a lot of our investors, this would be between 5 and 20% of their portfolio, something like that. I suppose one thing that's important to mention is the liquidity. So, if you're investing in most of our loans are 36-month term. So, this is really a 5-year game plan for most of our investors. Although we do have a secondary market where you can sell some of your loans, but most of our investors are in it for the long term.
Makes sense. And actually, that's a good kind of transition to a question I wanted to ask you related to risk. So, as you mentioned, liquidity is obviously one of them. Are there, and perhaps, the borrower not being able to pay the loan back, but are there any other risks that investors interested in this space should be aware of?
I mean, clearly, these are unsecured loans with small businesses, so that comes with high risk. And some of them run into trouble, and they end up being liquidated. So, I mean, as an example of our loans last year, around 12% are in default, which means that they're 90 days late in paying. And we'd expect some of those to get into financial difficulty and then to be wound down. So yeah, I mean we factor that in, I guess, into into the interest that you're getting back and so on. So yeah, it's high risk. I don't think there's much other than that. And obviously, if a borrower is in trouble, then we talk to them, we look to get some sort of arrangement, and the collections and recoveries team quite often find something down the track. So yeah, it's not always the end of the line when they run into trouble.
Makes perfect sense. And perhaps one final question before we move on to audience Q&A. Toby, so regulation, fintech moving really fast all the time. And what is one feature or evolution in the IFISA space that isn't here yet, but you expect to see within the next, let's say, year or two?
Yeah, I mean, look, I guess big chat around tokenization and stuff, isn't there, at the moment? So, crypto asset notes are going to be within the IFISA wrapper, and I guess that's quite exciting. Um, but tokenization of gold, carbon, I guess, and I think there's also, in my mind, a big opportunity for the secondary market. I mean, our secondary market, we don't see a huge amount of activity there, and I think there's a real opportunity for that across the board. If you look at all of the FISA providers, I think this is a good business idea. Somebody out there might want to crack on with this, is to be an aggregator, a secondary market aggregator that can deal across all of those. And I think that would be built on, blockchain or something that would enable it to be more real time, a bit like stocks and shares. So yeah, I think there's lots of opportunities.
Very, very exciting. Thank you so much, Toby. Without further ado, I want to switch over to audience Q&A, and we have quite a lot of questions here, so we'll try to get through as much as we can. So the
Great.
first one is, I guess, two examples here at the high end are Revolut and Brewdog. Inevitably, there will be winners and losers, but do you guys have a filtering system for founders coming to your platform?
Yeah, we do. Like I say, we do due diligence on every loan that comes through to us. And I guess, yeah, I mean, Brewdog, a huge story with a lot of issues behind it. And you look at the private credit market at the moment and some of the big players. I mean, but we're talking with those guys, we're talking billions. I think the Apollo fund is like 900 billion or something ridiculous. And I know Brewdog was huge as well. I mean, we're talking about £70,000 loan is our average loan to small businesses. And a lot of the due diligence really is done on the individuals that are running that business. So, I mean, if you look at the credit worthiness of an individual and the fact that they're a homeowner, and yeah, you dig into that side of things, as well as obviously looking at their statements, and we use open banking and so on, then it's a different scale and yeah, it's completely different, I'd say.
Awesome. Thank you very much. Next question. Love the story of the Brothers Tour Company. I mean, who wouldn't? Jack the Ripper
Yeah.
and Titanic. Great combo, by the way. These companies seem to be early on. Is there a world where they will come back to Crowd2Fund for more funding as they grow?
Absolutely. So, I mean, we have quite a tight credit policy. So we only take UK limited companies at the moment that have been trading for 2 years, and the director hasn't changed in the last 12 months. So it's quite a tight banding. I mean, we were at the Small Business Expo last year and blown away by the number of people coming up with fantastic business ideas, right down to a 14-year-old guy that, he was there in his suit looking sharp, and he wanted to borrow money. So, I'd love to be able to extend our credit profile down to some of these earlier stage startups. But yeah, we get a lot of repeat business. I mean, if we have a successful loan that pays back, then we're on the phone to them straight away and saying, "Do you want to borrow some money, some more?" So yeah, we see lots of success, lots of repeat borrowers, and we'll make that very clear when we're listing a campaign, because obviously, if they've paid back and they want to borrow again, they're a cracking business to lend to.
Makes perfect sense. Next question is actually a question I asked you, Toby, while waiting for a hot dog. So it's a really
Yeah.
good one, which is, do I have to choose individual credits to invest in, or can I spread across the entire portfolio of credits with a single investment?
So our minimum investment is £100. So you can start today by putting £100 into your wallet on the platform. We do have an auto invest feature or smart invest feature that will automatically allocate based on your risk profile. So you could say, look, I only want to invest in medium risk and I want to put this much in. Um, honestly, if you're, starting out, and a lot of our investors, we really encourage people to choose the businesses themselves. That's what makes it exciting. Um, so I think looking at what's available, what campaigns are there, and deciding who you wanna back is, yeah. I mean, the two brothers today are a great story. We've got vineyards in Wales. We've got, which is fascinating, like a vineyard in Wales. We've got, I mean, yesterday, a couple of days ago was a hot tub company. I mean, all sorts we see. So yeah, it's kind of cool.
I did not know Welsh wine was a
I
thing.
know,
Like,
yeah, who did? But
but
I think I
thanks to
put a
Crowd
bit
to
in
Fund,
them.
it is, right?
Yeah.
Okay, then we have a question from Charlie, and it's the million-dollar question, which is how do I find the next gem?
The next gem. I think I don't know. Look, I mean, that's one that I've got to be careful with, haven't I? But I think it's really about, I mean, my personal opinion is it's about the people that are behind these companies. And I think, when you see the Q&A sections on each of our companies, where the directors are responding really quickly and they're obviously passionate about what they're doing, and, the story is compelling. I think a lot of it is about the story. I mean, you can look at their numbers, I mean, the example I gave, they are profitable, they're doing well as a business, and on paper, that's great. But also they're compelling individuals. So that's how I pick them.
Makes sense. Then we have a question which I guess we've kind of semi-answered, which is what are the main risks involved in these type of investments? Perhaps I will just add maybe a question to it, which is, in your opinion, Toby, do you think there's any risk of what we're seeing in the private credit market spilling over to this space or not really?
Yeah, I wondered if I'd get asked that. I think what we're seeing in private credit, like I said, Apollo and BlackRock and the big guys, these are 900 billion funds that a lot of them were invested in um tech businesses. So, and that's, I think, what's underpinning the people looking to take their money out, is because AI is gonna, annihilate a lot of these software as a service borrowers, and it's on a much bigger scale. So I think and it hasn't really filtered over to Europe in quite the same way as it is in the US at the moment. So, I mean, that's why I think we're great. Instead of investing in the Magnificent Seven, pick a florist down the road. I mean, it's something that I don't think gets touched in the same way. I mean, even if inflation goes up and whatever else, I think some of these businesses, they still do what they do day in, day out. They're the backbone of the UK economy. So yeah, I don't think it will.
Yeah. And I guess Welsh wine and Jack the Ripper tours are AI proof. So unlike some of
They,
the software
yeah,
companies,
yeah,
big
they
boys were
sure
lending
are. They sure are. Yeah.
So we've got another question, which is, have you seen an interestingly particular area from your investors?
We get all sorts. So we really do. I mean, those are some great examples. Hot tubs, um, in fact, the team were all going out on Thursday night to a bar in London called Cubana, and they were one of our early borrowers. And with them, they grew the business and, hired more people. And yeah, we're still in touch with them, and we're going for a team night out on Thursday. So, we get all sorts of people and all sorts of businesses, and most of it's about working capital. Or expansion. That's what most of them are trying to do.
Is that the one in Waterloo, Cubana?
It is, yeah, yeah, yeah.
Yeah, I like that place.
You
They
can
do
come
some
and join
nice.
us, yeah, or anyone,
Yeah, if
anyone
I
in the
was there, I would
community.
be. They do some fun salsa nights. So,
They do, yeah, yeah.
we've already answered this question regarding has there been much impact in the companies related to the challenges in private credit recently? Anything else you want to add, Toby?
No, I mean, we've got huge growth opportunities. I mean, we turning on the taps from a borrower perspective is easy. Like I say, it's 65 billion underfunded. I mean, our competitors, likes of Funding Circle, iWalker, and so on, all of their money comes from institutional investors, so they're different to us. But they're doing huge amount of lending, and yeah, these businesses, like I say, it's a huge part of the UK economy. And yeah, I don't think it will be impacted in the same way. I really don't.
Makes sense. And then we have two questions from Olivia, who's asking the right question. So first is, what is the average return in an average IFISA portfolio? And then secondly, what's the average failure rate since the investments are in new businesses with potential of liquidating or going out of business?
Yeah. So if I just use 2025 numbers, so we if you invested in every loan in 2025, including the ones that have run into trouble and including our 1% basically administrative fee that we charge for the repayments, you'd be getting around say 10 or 11%, something like that.
That's really good. And do you have like the granular in terms of like what's the average failure rate of these companies?
It's difficult to give an average because it's like different cohorts. So obviously during the COVID era, a lot of businesses ran into trouble. So yeah, 2020, 22 was not great. I think, there was a lot of businesses that ran into default then. Um, I think yeah, I mean, different cohorts. So if you're looking at last year, it's a default rate of under 15%, which is, kind of expected across the board when you're looking at those kind of returns.
Makes sense. And then I think we have time for one last question, which is, are you structuring the IFISA akin to ETFs, or are you a platform that allows to trade it?
Whoa. Um, I don't think I understand that. I mean, we're not ETFs, so it's just basically your investment, your wallet is within an IFISA wrapper. Yeah, so it's not, it's not like an ETF that you'd be trading.
Yeah, I think that's the best way to put it. ISAs of all types, you think of it as just a wrapper that you put
Y-
investments in.
Yeah.
Makes perfect sense. Well, that was super, super fascinating. I'm afraid that's all the time we have today. We still have, some questions, but it just shows how much interest there is in this space.
Yeah.
And yeah, thank you so much, Toby. This was honestly really,
Thank
really
you. Thanks
fascinating.
so much. I mean, it's really nice to get word out there. People don't often know about IFISAs, and I think it's great. And I think it's great mostly because of the reasons I said, which is it's fun and you're supporting small businesses, or if you choose another provider, you're supporting something that, you can be passionate about and actually be involved with. So yeah, I think it's good.
100%. I mean, I certainly learned a lot. So thank you so much, Toby, on behalf of myself, the Finimize community, and everyone attending. And we'll see you in the next one. Ciao.
Cheers.